Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Monday afternoon edition. Kicking off the week with, I actually was surprised. I was supposed to actually not have a show today, and then things fell apart. So lucky for you, I have a show today, but I will not have a show Thursday. I will be recording with Todd Davis in my home studio. So we'll be busy. So no show on Thursday. Just clearing that up, making sure you guys know about that one. So I'm going to start thing. Yes, Lisa says, Merlin, I imagine you already know. MicroStrategy bought 3,000 additional Bitcoin. Yeah, crazy, right? Just happened to buy 3,000 more. And again, when you have a fixed amount of supply of anything, what's happening right now is much like what the Hunt brothers did with silver. Was it in the 80s or yeah, I think it was in the 80s? They cornered the market on silver. At this point, it looks like you're getting Michael Saylor and MicroStrategy will have cornered the market or are cornering the market on Bitcoin by buying and buying and buying and buying. So, a lot of people giving him flack for it right now, thinking that it's not the smartest choice. He's putting too much into Bitcoin. But if Bitcoin continues to get adoption and he keeps buying more and more, you're going to see this thing keep on going. So crypto is absolutely popping. Big Gab, loving that one. And again, I really don't see too much other than some technical issue that happens with Bitcoin, or the regulators shut it down or try to, which they cannot do. But it seems at this point, I don't see much stopping Bitcoin from continuing to surge and surge and surge. But today was a great day. We'll get to that one. Let me get to the topic du jour, which, as you guys saw from the graphic, was this one: creating a new financial product. All right, you're like, what do you mean by creating a new financial product? So the question was brought up by Questlog. He received some information from the CME about an equal-weighted futures index. And one thing I've experienced throughout my lengthy career as a trader is the market is always trying to create new products and services. There's new things trying to get your attention, right? If Nike just made one pair of shoes, you'd get bored with it and eventually you'd move on to a different shoe company. So that's to continue to make new products and new shoes. And, the more they keep releasing products, most likely, a lot of them are going to disappear and go, that was a dumb idea. Some products may stick, and all of a sudden they become just giant money makers for the firms that release that index or that product. So before I go into the CME's product, I thought it'd be interesting to do a little bit. Hey, Linda, been a while. How you been? So hopefully see you at trivia tomorrow if you're up for it. My trivia has been awfully challenging, I'll tell you. Years ago. Well, let me take a step back. You guys know I'm a big fan of the dollar index. I look at the Dixie every single day. And if you look at this, here's the dollar index. It's not, I don't really care what the price of the index is. I'll be honest. It doesn't matter to me, if it's 103 or 99 or 150. It doesn't make a difference to me personally what the number is. What makes it different is what's the trend of the dollar. In this case, what's on my screen here is really the past year, little year and a quarter. You can see there's been a lot of chop, and we're kind of around the midpoint of the range. What I want to see is range. Is trends. And I don't think we have a great trend right now. I feel like we might be starting a nice little uptrend. You can tell we've been making higher highs and higher lows starting back in December of last year. Now, this is, from a macro perspective, a driver of markets, because as that dollar surges, things become more expensive for foreigners to buy. It takes away exports. It starts to hurt our economy a little bit. The stronger that dollar gets, the worse it ends up being for the economy. And let me be clear, this isn't like, the dollar went up today, it instantly has to be a market crash. It just means it's putting more and more pressure, kind of like putting your foot on the brakes, right? The higher that dollar goes, it's putting slowly the brakes on the economy. Now, if we get a strong, parabolic move up in the dollar index, it's probably going to have a pretty quick reaction with the equity markets, and they will most likely sell off. And I've always found the dollar index to be useful in my broad analysis of markets, particularly when I'm looking at the broader trends and making swing trades or longer-term position trades. Now, that said, I'm sure most of you know, but two things. You can type it in the chat here. I'm curious. And don't look it up. I'll see if you guys know off the top of your head. The Dixie, the one that you see on your screen here, is made up of 6 different currencies. Which one is the number one weighted currency in that dollar index, and what percentage does it constitute of the index? So type in which currency you think it is and what percentage of the index it should be. Now, In my mind, when I first learned about this, I was thinking, well, okay, there's 6 different currencies in there. There's a reason behind all of those. And in looking at that basket, it should be fairly evenly distributed, right? It should be spread around a little bit here and not too much on one. So Steve and Andres have it correct, right? It's the euro, but what percentage? This is the one that's really kind of shocking. I like to use indexes as a way to help guide my thinking, but what percentage of it is it? So Andres says euro is about 60%. Yeah, it was 57.6, and it's right around 60%, which is, in my opinion, that's bad. So here is how these indexes stack up. And I haven't done a reveal on this. Maybe I'm going to add something here real quick so I can bear with me 2 seconds as I change my graphic here. I made a little table to help you guys out with this one to understand kind of the significance of it. But let me add in this one here, add an animation to this, and I will have it exit on a click. All right, so now I've got this one up there ready. So now you guys can see this are the weightings. It's pretty crazy. Well, Tomasino, before I even get into that, let me go to that comment there. She says, I'm not big on Forex. Okay. You should learn the basics because money makes the world go round. You've heard that phrase happen. And watching how different economies perform and the strength of currencies can give you monstrous advantages with regards to your home market, wherever you are. And that goes for anybody here, whether I know we have some people here from Japan and some people from Europe. Know the power and value of your local currency. 2 things. Know the power and value of your currency. And the second part of that would be know what the strong suits are for your economy. You know, you could look at Canada. You've got commodities, gold and oil. Same thing for Australia. You know, these are important things to remember because the impact of that native currency can have a huge impact on those assets and create even like almost magnified rates of return or losses if it's going against you. So here is the makeup. 57.6% the euro. Right away, it makes me lose a little bit of faith and credibility in the index because it's basically just the euro cross pair with the dollar, right? Yes, Pepe, it is I believe it is the most traded market in the world. Second on that list was the Japanese yen at 13.6%. British pound is 11.9%. Canadian dollars at 9.1%. The Swedish krona, 4.2%. And then the Swiss franc at 3.6%. Now, the reason I brought those up and kind of present them like that is, okay, I get that the euro should be in there, right? In my mind, if I look at the dollar index, you got to look at the major global economies and the ones that are really driving things. So certainly the euro should be in there. Certainly the Japanese yen. Certainly the British pound. You know, why not have the yuan in there? I mean, you would think China's just insignificant in the global playing field. I understand that they manipulate their currency, but you can't kind of discount the value of China here, even though they manipulate their currency. And let's be honest, so does the U.S. market. Then you have the Swedish krona. No offense to my Swedes. I'm a huge fan of Sweden. But as a global turning point or a global mover, what do you got for me? Volvo and IKEA. All right, I'm a fan of both. I'd rather go to IKEA than, Volvo's nice. But it was strange to see the Swedish krona and then the Swiss franc. I guess, being their international peaceful stance with everybody and this big money center, all right, you got to include the Swiss franc. What I don't like about the dollar index is that it is so biased to the euro, it skews it, in my opinion. Now, this is something that I felt needed to change. I thought that this has to change. It would be better if there was an index for the US dollar that was equal weighted, that did not put such an emphasis on the euro and maybe spread it around a little bit. Now, granted, I think that the impact of the European Union versus the Swedish mark or the euro versus the krona, euro certainly has much more power and should be a heavier weighting. However, they came out with a product. This is FXCM came out with this product many years ago. I got to interview the guys that worked on the team as they brought it out, and I was like, this looks great, guys. And what it was called US dollar. So the one on your screen now is the dollar index, the Dixie. And then, that's Sly Dog says they have meatballs. They have great meatballs, by the way. Oh, they also have, there's some crazy fish in a can that's one of the most disgusting things you can get. Yeah, Volvo was bought by the Chinese. Well, it was a nice thought, MJ, right? Here is the components of the dollar index. This is the one on the right is FXCM's dollar index. The one on the left is the dollar index that we all use, not we all, but that I use all the time. So when this product on the right came out, it was a new product, and it was like, wow, this is much better. You know, you've got the Australian dollar. I mean, I would have thrown the Canadian dollar in there as well and just, you know, divide it up by 5, give them each 20%. But they've got 25% the euro, 25% yen, 25% British pound, and 25% Australian dollar. On paper, to me, this does, it looks better. It just doesn't seem to be as biased towards one currency. However, the problem is this. At the time, I was like, I'm switching. I'm going to use that US dollar index, right? The issue was nobody's using it. You know, the main market forces were still using the dollar index, whether it's because they had some advantage to using it or it's just legacy, they don't want to change their systems, or they were just like, I don't care. It seems like most people are still using that DXY dollar index versus the US dollar equal weighted index. So the reason I bring this up is the CME is coming out with a brand new product, which will be released. I believe it starts trading the 20th. Is it today? It's today. It's supposed to start trading today. And that product is an equal weighted S&P. Now, why is that significant? Well, as we've looked at many times, here comes Margaret. You're going to give me a hard time about this one. Let's go. I got to get my typing going here. Sorry. Tough to type that one at the same time. I've lacked that skill set. We've looked at this many times, which is the weightings of the S&P 500. And it's definitely skewed to the Magnificent Seven. We've talked about that many times over the past. And here it is again, just for those who might be new. You look at your top 10. Well, you really just go to the Magnificent Seven. You've got Google is about 3.7% of the index. Meta is 2.5%. Amazon's 3.71%. Nvidia is 4.53%. Apple is 6.3%. And Microsoft 7.5%. There's 503 companies in this index, and it's just completely overweighted. So what the CME is saying with their new product, which I think many of you probably will be excited for this one. I think it does represent an opportunity. The question is, will it become like this amazing trading vehicle? Much like the ES is, you know, the ticker symbol is ES. This will be EWF, which will be the E-mini equal weighted. So EWF will be the ticker symbol for it. And what it tries to do is says, okay, we've got 503 companies in here. It all gets the same weight. Now, I ask you this, is that a good thing? Do you think that this is something that would take off? And at face value, it is a better product. However, I don't know, I come into an obstacle here mentally, because if you look at why our markets have done so well, it's because those in the S&P 500 that have been so overweight have been the biggest gainers and have pushed that higher and higher and higher. If the market was tracked by the equal weighted index, we probably would not have had the same market gains. As a matter of fact, we might have been down, as we've seen through a lot of statistics. It's really like the top 15 companies in the S&P 500 of what dragged everything up. The rest of it's actually been bringing it down. So, you know, while I'm excited for this one, and I think that the question came from Questlog. Here's the question that came in. It says, I got an email from CME showing that they are going to change the S&P E-mini. That's not correct, Questlog. The E-mini is going to stay exactly the same as it always has been. That's their best-selling product. Why would they ever think of changing that? What they're doing is they're issuing a new product, which will be the S&P 500 equal weighted mini. So it's just a different ticker symbol. It says here, the index invests approximately 0.2% weight in each constituent at the quarterly rebalance. Based on their statement, it appears that the E-mini will no longer follow the actual index. This one will not follow the index. This one will be rather different. And I don't have a chart of it here to show you guys. But this is a new product, right? This is something the S&P is bringing out, hoping that the markets will adopt it. Personally, I don't think they will. Just because the E-mini is just such a behemoth. It's so popular. You know, what would be, you guys type in the chat, what do you think your incentives would be what would be your incentives to buy the S&P equal weighted index and then the S&P standard index? The big thing is you're getting a more balanced approach. So should something happen with Microsoft, which I think is still number one, let me just verify that one. Microsoft is still number one in an index. If Microsoft has some crazy thing where they have an accounting irregularity, their software gets hacked, and all of a sudden Microsoft drops 50% overnight, you would be destroyed in the S&P E-mini. But if you were in the equal weighted, you wouldn't, you probably barely feel it. Of course, that would bring down a lot of other companies as well. There'd be a certain knee-jerk reaction. And I'm making a dramatic example here to show you that that's why an equal-weighted index would be better from a safety and risk management perspective, because not one of these companies has any more credibility or weight on the index than the other. It won't work for active traders. For long-term investors, it will be great. Yeah, it might be. Here's what I think. If I had to choose between the regular E-mini and the equal-weighted index, I would look at the market and look for a period of time, as we've been experiencing over the past couple of years, where the top components are the ones that really have added all the weight, added all the gains of that S&P have been Microsoft, Apple, Nvidia, Amazon, right? If I feel like the market is getting frothy, overbought, it's just been soaring and soaring and soaring like this, it might make sense to sell your SPY, which is the normal ETF, and then buy into an equal weighted index. And the reason is because when those big cap stocks have their pullback, which I think we all would agree at some point you're going to get big pullbacks in them, right? It's just nature of financial markets. The impact to your portfolio won't be as severe. This is a cash index, and it's not an ETF yet. It's simply a futures product. I believe there are equal weighted ETFs. Let me check here real quick. I believe they already exist. Equal weighted S&P ETF. Wow, that almost read my mind. I probably listened to the microphone. So there is there is an index for it. The index has been there a long time. Remember, you can't trade the indexes. Here's best equal weight ETFs to buy. Okay, so yeah, there's a bunch of them. I don't trade them, but let me just let's see. Spider, no, it's biotech. Oh, it doesn't give me this one. This is just equal weighted Dow and things like that. Pretty sure there's something out there. RSP. Yeah. So the RSP, there's your equal weighted Invesco's equal weighted index. So you could already be buying into this product. Now, what I cannot do, because my platform, this account won't allow it, is show you how different these two charts look. So I'll keep this one right here, RSP, and then let me real quickly type in SPY, see what the difference looks like. You see that? It's a dramatic difference. So regular SPY has been much stronger. I mean, if we look at the peak from this peak here in July of last year to where we peaked out at just a couple days ago, you're looking at market gains of roughly 11%, right? From the peak to the peak. If I look at RSP, it's going to be much more muted because Nvidia is taking up a big part of this from peak to, or should be much more muted. It's only moved up 4.26%. So that's, to me, the big problem here. Tech has been just surging and bringing this whole thing up because it's equal weighted. That monster Nvidia gain that you guys have been experiencing, that's gone. Right? This gain from those November highs to just Friday's session, you had a 63% up move in Nvidia. Of course, that's going to have a huge drag on these markets to the upside because it's a heavier weighting. But with that equal weight, this impact is negated. So the only way you're really going to, I think, catch up with an equal weighted index is if all these other companies that have been underperforming turn around and start to move back to the upside. So I think that from a risk management perspective, the equal weighted one's going to be safer. It's more diversified and equally diversified. But I don't know. I don't know if I would find myself using this equal weighted futures product. Again, if I'm trading futures, I don't care about the markets. I really don't. I'd rather have something that moves a lot. And in principle, at least for my assumption would be that an equal weighted futures product, S&P 500, will not have the same volatility as an S&P 500 E-mini. When you equally weight everything, a lot of that volatility is going to disappear. And I think Pepe is a short-term day trader here. I think you'd agree. Who cares what the product is? I just need to make sure it has enough waves intraday for me to make moves on it. And I don't think the S&P equal weighted index will have that. Would you trade the equal weighted index? Yes. I just answered that one for you, Pepe. I would not. I don't see any reason why I would trade that. As an investor, as something, maybe throwing some in my 401k account. If I was longer term, I might actually think about this one. And I would think about it now because you've seen such a big disconnect. You've seen, if I could, let's do, here, I'll try something here so you can see the difference and see when they catch up and don't catch up. Let's go to stock charts. stockcharts.com. And let's go in here, and I'm going to type in SPY, and we'll do RSP. And this will show you the difference between these two, and most likely the red is going to have the much bigger gains. And there you go. But remember, we have been in a tremendously bullish market for a long time. So of course, and it's been pushed up by tech, which is the leading components of the S&P. So if you go back the last 200 days, that equally weighted index is only up about 15%, 14.88. Whereas the straight S&P is up 23.95. I mean, that's almost a 10% difference in them. Not bad. Let me see how far back I can go with this one. Now, this is interesting. This is very interesting. When you take into account the market corrections, all right, this goes all the way back to 2003. And maybe that's, I mean, obviously I could go back to any point and find something to validate my suspicion. But I would believe that there are points, particularly when the markets crash, that the equal weighted index should perform better because of its diversification. So let's go back to, here's from the bottom of 2009. You actually have the, let's see, S&P is up 703. Equal weight is up 697%. So they're actually not that much different. Let's go back to the COVID lows and see where that, if that was a big, or where the quote. Yeah. So pretty much under most circumstances, it looks like the equal weighted underperforms. So you can see back here in 2021, 2022, it was actually outperforming the S&P. But I think as a risk management tool, it would appear to me that going into the equal weighted as a long-term investor would probably be safer. All right, I might have ruffled some feathers. Let me see what we got. How is the equalized cap? It's equalized just by in the portfolio. So if they have 10 in the portfolio, they're going to get 10% weightings. If they have 100 in the portfolio, they'll get 1% weightings. So you saw it said they were doing like 0.25% weightings, I think was the actual number on it. They're just whatever, how many are in there? Divided by the number, and that's your percentage. When you trade equal weighted, yes and nope. I told you that one. You can check the ATR. Yeah, I could look at the ATR. That's definitely one way to do it. Adjusting my weekly schedule to make sure I can check. Oh, awesome, Jeff. Thank you. Changing your schedule for a little old me. I appreciate that. Right, I trade or invest in the S&P 500, TCP, C Fund. All right, there you go. Steve says Forex mix, percent total volume. US, euro, dollars, 30%. I'm not sure what that was relating to. You're basically just meaning that's done by popularity of the instrument, right? So euro, US dollar is probably the most traded currency pair out there. Sure. Not sure I don't want to have less of the winners just because they have been so good. There is a reason. True. Which, the topic was creating a new financial product, and I don't see this being anything significant. I don't think this is anything exciting. I don't think this is anything noteworthy to be excited for, that the CME is coming out with a new equal weighted product. So Questlock, that was answering your question. They're not changing the S&P E-mini, no way. But they are making a new product, which is released today apparently. But my guess is it's not going to be met with great fanfare. If you're a trader, you want volatility, and I believe there's going to be more volatility with the regular S&P. All right. Underweighting winners is not a good long-term. Correct. The only reason, Steve, I say that is there's sometimes comes a point where the leaders in an index go absolutely parabolic, and they're going to have a correction back down. And because, like NVIDIA, I think NVIDIA has been way overdriven. I'm not saying that the company's not worth the money. Down the road it might be. But when you have that euphoric pop like that, generally there's a big pullback that comes. We haven't actually had it, although today's NVIDIA chart, let me bring up the NVIDIA chart for you guys so you can see that one. Here is NVIDIA. You look at today's NVIDIA chart, well, you've got the second day in a row of, I'll call it negativity. Even though it gapped up on Friday's session, today you get this small little spinning top, not much change in direction. Volume was actually fairly high for a spinning top day. This is one that if it starts to break some lows here, I may actually put a line right. I almost bought puts today, but I just didn't want to be too much of a gambler. Being a bit conservative here lately with my trades. If we can open up above that 785 mark, and start drifting below it, then I may look to be buying some puts as a short-term trade here. I don't think that Nvidia is going to crash, but I do think that there's a pullback coming, and you got a big unfilled gap there that was created from their earnings announcement last week. So, Euro USD is my favorite pair. Yep, me too, Mimi. I only trade majors, so I only trade things that have the US dollar in it. I know, like David Warner, he loves the pound yen. I'm like, I've traded it before, but I don't trade it anymore. Okay, so that was the question number one that came in, which was asking about creating that new product and what my thoughts were on it. Well, there you go. My guess is that the equal weighted one will fizzle out, just like that equal weighted dollar index. I mean, like I say, no one really uses this thing, yet in my mind, it does seem like a better go. It's more evenly weighted, although we do more business with the European Union than we do with the Swedish markets or the Swiss markets. So I guess there's logic to why it's weighted that way. It's the most popular currency out there, so why not? The other part, I got a comment from somebody, more of a complaint, if you will, telling about my comments about miners and saying I was telling people stay away from the miners. Remember, my comment was not, you have to stay away from them right now. I said as of March 1st, their numbers will change significantly because of the mining rewards, and that gets cut in half. For right now, if Bitcoin has a huge surge like it did today, of course miners are going to do well. I mean, check out what happened with miners today. First off, we'll start with, we'll go up the top of the chart here. Bitcoin up 6.8% today. Talk about a great breakout. I mean, this is awesome. My guess is we'll be at 57,000 here in a very short window of time. We're at 55,290 on the futures right now, looking absolutely great. Part of me is a little bit disappointed because I really kind of wanted to buy some more Bitcoin. I was waiting for a pullback. It didn't happen. Oh, given my current position in Bitcoin, though, I'm not complaining at all. $3,500 gain per Bitcoin today was a very nice day. Now, when that happens, certainly you have to look at other things that may be moving out there. So you can look at Mara. Huge pop to the upside today, of course, because Bitcoin's surging. Remember, these companies all hold Bitcoin. Now, I don't know the quantity on their balance sheets. You can find it. There is an address. There are addresses that you can go check, and that's their holding addresses. It's kind of known in the industry. There's I forget the name of the company. There's a company out there that tracks all the balances for these crypto miners, and they hold Bitcoin. So, of course, when you have a 7% gain in a day, it's going to really pop the share prices of Marathon and Riot. Marathon's up 21% today. Riot 17%, but both the same basic chart. So if you feel like Bitcoin's going to continue to move up, as I do, well, then probably going long on these miners is not a bad idea. Just keep in mind that as of March, actually end of April, maybe March 1st. I'm not exactly, it depends on time. There is no definitive date. It's just at block 210,000 blocks, the reward gets cut in half, and that should happen right around end of April, first day of May. When that happens, from that day forward, I would not touch mining stocks for a while because they probably are going to take a pretty big hit because their earnings are going to get cut in half unless the price of Bitcoin doubles by then. So just wanted to clarify that comment that was made about Bitcoin, crypto, and the halving in miners. Last one, as was mentioned earlier, he's at it again. Michael Saylor bought another 3,000 Bitcoin. They now hold $10 billion worth of Bitcoin. You gotta love that. $10 billion. Yep, Big Eb read my mind. You got 16% pop in MicroStrategy, which I've mentioned countless times. I don't even know what the hell MicroStrategy does. I know they're a technology firm, but honestly, nobody knows what they do. They just know MicroStrategy holds the most Bitcoin of any publicly traded company on the planet, and it's probably going to continue to build that position more and more and more. Bravo. Brilliant move here by Michael Saylor. We'll see if it all pans out. I mean, you guys can imagine, right now, Bitcoin sitting at 55,000. But if the forecast by Cathie Wood and others, including myself, is that, a decade down the road, it's $1 million plus per coin, you can imagine he may be the first trillionaire on the planet based off just his Bitcoin holdings if he can corner that market. Well, we'll see. That's obviously something that's just speculative and way, 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 way down the road. But MicroStrategy doing very well with that surge in Bitcoin, again, up about 16% today. It is a software company. It's a technology firm, if I understand correctly. They're business implementation systems and things like that. I don't know if it's a software solution, but I probably should look into that, right? Should know what MicroStrategy does. I've never actually bought MicroStrategy, but okay, so that's that part. Let me go in here and start running through our top 8. And if you have questions on stuff, just let me know. I will gladly go into that. Gold is your worst performer on the day. Still stuck in that sideways channel. I mean, it's been there for a while. Margaret says, where does Michael hold his Bitcoin? That's a great question. Knowing Michael, it is not on an exchange. He probably has it on, I mean, seriously, like a ledger. He's got it on cold storage somewhere. I don't know where. But he is one that his whole platform, when you listen to Michael Saylor speak, and there's plenty of videos out there, his whole thing is, it's ownership. You can truly own something. If you keep it on exchange or any of these other places, you know, it's not yours. It's theirs. Keep your money in the bank. It's not yours. You know, I've mentioned that before too. So he's probably got it on cold storage somewhere, some cold storage device. I would not imagine him having it anywhere public at all. Yeah, the Bitcoin thing was a bonus for you, right? I bet it was, Lisa. Shamrock shakes are back. Are we getting ready for St. Patrick's Day? Shamrock shakes. How to get 3,000 calories in one glass. Let's have a shamrock shake. All right. Like saying McDonald's is a fast food company when they're really a real estate company. Correct, Steve. And it's a thing of perception. A lot of people think, oh, McDonald's is fast food. No, one of the largest landowners in the world. All right. So back to my top 8 here. Gold, down 0.5 percentage point. But for anybody who's doing spreads, just trickling sideways. And it will probably stay here until it's not. Profound, right? I know you're like, wow, Merlin, that's why we pay you the big bucks on the show. Until we get above that box or below it, just play that sideways action on gold. Dollar index, the Dixie, drifting a little bit lower today. I actually thought we'd see it move up today. You saw the last 2 days on Thursday and Friday were kind of indecision candles, and I was expecting it to kind of rally up today, but no, slight down day, down 0.16 right now as we speak for your Monday session. S&P, down 0.42%. Come on, S&P. There you go. Down 0.42. For those of you who are following my shooting star rules, you did, in fact, get a trigger today. If you follow those rules, you'd be short right now. We opened up right at the... My line on the chart was 5,094, and today we opened up at 5,095, rallied up a little bit, and then broke down below it. So that is a clear, okay signal to go short based off the shooting star we saw on Friday's session. So there you go for anybody who followed that one. I hope it works out well for you. That was down 0.42%. NASDAQ has a similar one. It did tiptoe down below that trigger point for that shooting star, and that's back above it. So you're underwater if you're on the NASDAQ one. The Russell did not have that shooting star, but is showing a little bit of strength here and trickling back up. The good news is it's still slowly creeping higher for that Russell 2000. All right, podium time. Now, the 10-year is on a new session, so that's not, the percentage you see there is not reflective of what it did today. From today's change, you had an increase in that yield of 0.87%. All in all, still feel bullish on this one. I do like that little trend that started forming back in December. Again, we're making higher highs, higher lows. A little bit of a pullback here, slightly deeper than I anticipated. We'll see if it breaks this highs right around 4.355. And this week, I think it will happen. After that, you're looking at 4.5 on your 10-year. Crude oil gaining 1.43%, but again, it's not really doing much. We've had 2.5 weeks of just sideways action here for crude oil. Definitely hitting its head right on 79.29. Can't seem to break through that one. We'll see going forward. I have a feeling you're going to see it break through that one and move to higher. And lastly, I already talked about this one. B to the T to the C. Bitcoin, again, up 7%. But, this is why, for those of you in the crypto world, you know that, Bitcoin's fantastic. But when you get some of these altcoins, they can surge a lot higher. I mean, you're looking across the board here. There's some pretty big gaining numbers here in the last 24 hours. Fortunately for me, I do own a few of these as well, so that makes it even better. Hood is moving up. I have not looked at Hood since I think you brought it up months back. We talked about it being an acquisition. Wow, that is impressive. Yeah, I have no clue why. Margaret. They have been doing really well. Maybe their profits are starting to surge. I'm not sure. What do their earnings look like? Did they make some money? Their earnings were great. That's part of it. Well, I say great. they were expected to lose a penny, and they came out at 3 cents per share profit. And it looks like they've been losing. Well, they actually reported 3 cents back in August of last year. So they've definitely been struggling with a couple small little gains. This earnings announcement and maybe their forecast, I don't know. I don't follow Robinhood at all. I just thought it was going to disappear. I still think it's going to disappear and go the way of the dodo, which would be no disappointment to me. Let's see. What else? I already went through those questions from yesterday. Let me check here real quick. I didn't get a chance to put all the questions into YouTube. And Martin Luther King, who follows me on YouTube, he said, Naomi Brockwell. Yes, Naomi Brockwell is the girl I was talking about that's all about identity and making sure privacy concerns are utmost importance for all of us. I reached out to her over the weekend, but I haven't heard anything back. We'll see if I can get her on to talk about it because she's very bright. She's actually, when I first met her, it was at Freedom Fest in Las Vegas in 2018. So going on 6 years ago. And her nickname was Bitcoin Girl. Bitcoin Girl. She was great. Great interview. It was a lot of fun. We'll see if we get her back on. Let's see. All right, just making sure I got all the questions. All right, good. Got them. How do you think the government shutdown will impact the market? The same way it impacts it every time, VB. It happens all the time. Every time this one comes up, it's just they'll wait to the last second and then they'll push something through and raise it. Oh, we're just going to do this the one last time. We'll just keep raising it one last time. Just this is the last time. I don't think there's going to be anything really dramatic about it. You know, as we get down to, hey, John, have a good flight. As we get down to election time, getting near the tail end of the year, I think this will be used as much more of a political tactic. Now, it could also be something that gets utilized now at the next, vote on it. But I don't know. I don't think it's going to be that big of a deal. If for some reason they play hardball, which is what they should do, and not raise the debt ceiling and actually have to come up with solutions to fix the problem as opposed to just raising the limit of money that they can spend, then I think you will see markets struggle. Because right now we're just injecting more and 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 more money into our economy, coming out from nowhere. That's not right. It shouldn't be that way, but it is what it is. If we stop that and correct it, the markets will suffer. If we stopped and didn't raise the debt ceiling and found ways to actually pay down our debts, which means we'd have to stop spending on all this stuff, then markets would take a hit. And no one wants that going into their election. So you could make the argument that Democrats will stonewall it or the Republicans will stonewall it. They definitely don't want the economy to stagger as they go into November elections. After that, do what you want, but they won't. You know how it is. Remember, their best interest is not the country. Their best interest is what's in it for them. Getting reelected is more important than doing their job. Google was punished because of Gemini bias. Yes. Yep. And again, people call it bias. I don't know. I don't know if I would call that's an algorithm, a programming issue, that they were programmed to be woke and create all these images. I think it's just bad AI, Yes, I do think Google took a hit because of that. They're getting a lot of feedback. Elon Musk was just going after Google. Man, he was on Twitter account. I was like, lighten up, bro. Calm down. You're okay. I think it's because I think Tom, or you sent me a picture where it had Elon Musk with blackface on it. It's like, okay, well, it's just AI. Someone might even prompt it in that, but who knows? That's why I did that show on Friday, showing a little bit about some of the different AI outputs for Google versus Midjourney, which I use. So yeah, today down 4.5%. Is this going to hurt Google in the long run? I don't think so. Yeah, I think if anything, I'd love for there to be kind of the same panic there was for Anheuser-Busch or for Target, where it craters, and all of a sudden you see Google down 40% over the next couple days because, oh, well, it's just AI. I'm loading up. If that were to happen to Google, I'd be buying into Google, no questions asked. Anyway, yes, that's one of the main reasons why Google had this dump today. When you look across the board at some of the other, when you look at some of the other tech companies, Microsoft was down slightly, 0.68. You had Apple was down just a little bit, 0.675. You've got Meta also down 0.47. So most of them are down, 0.5%, and then there's Google, which is down 4.5%. So clearly an outlier on the day. There's Amazon down 0.15. Amazon looking better and better and better. Might be the leader this next cycle to the upside. Okay, that was it for me. That's all I had planned for today. It's all the questions you guys sent in. I answered all of them. I feel pretty good about that. This week, as I mentioned, no show on Thursday. I reached out to Craig Weil, Naomi Brockwell. I think Brandon Waddell is probably going to come back on at some point here in the next couple weeks. So I will bring on some guests. I know you guys are probably tired of watching me talk about the markets all day long. So, or not all day long, at least for an hour a day. But I'll bring on some guests here and hopefully mix it up a little bit. Anything else you guys want me to cover before I wrap up? What else I got here? Yeah, I already covered all your guys' questions. So if I see something type in the chat here, I'll answer it real quick. If not, I will wrap up. Oh, I got to look at your economic calendar and earnings calendar. We do have some stuff, some good things happening here. Do I still hold Walmart? Nope, I do not. Nope. Those were puts. The only I have Rivian long. I sold puts on Rivian as well, so it's kind of a double position. I have Palo Alto Networks. I got out of my iRobot. I've got silver. No GLD. Got out of some GLD. And I have some UNG as well, some natural gas. Oh, did it? Wish I would have held on to that one. WMT. Oh, okay. So that's their split to. Yeah, that's right. I'm glad you brought that up, Lisa. I didn't know that one. But when you have a split like this, it'd be interesting to see when the announcement was for the split. So let me go back here, and I'm just going to go offline here and go look at when they made the announcement for the split. It was set for February 22nd. One second. I just want to see when they first made that announcement. Was it 4 weeks ago? Yeah, it was Walmart announced it 4 weeks ago. So a month ago. So let me real quickly bring that up. It was January 30th of 2024 is when they made that announcement. So let's go look at the price chart here. January 30th, 2024. Which it looks like I actually had the vertical line on it. Oh, well, I guess this backs up my thought. We had it marked here, and I believe someone asked me about the split, and I said typically it rallies up until the split. And when they made that announcement of the split, Walmart was trading at $55.01. And here we are today at $59.60. So my guess is tomorrow you'll probably have a little bit of a gap up. And then over the next few days, you could get some great shorting opportunities on Walmart. Because typically when it splits, you get all these people who had, 1,000 shares of Walmart. Now they have 3,000 shares of Walmart. And like, oh wow, I'm going to sell 1,000 and the rest is free money. No, it doesn't work that way. The value of your 3,000 shares of Walmart equals what your old 1,000 shares was, right? Because the price has dropped by 33%. So it's a psychological thing, but people like to buy the rally up to the split, and then once the split happens, they sell those shares. So keep your eye on that one. My guess is by the end of the week, let's put a line right here. By the end of the week, I'll put a good wager on this one too. We're going to be lower than 59.60 by the end of the week. I was thinking of when you heard about the split. No, I didn't have the stock. I was with Walmart, if I remember correctly. That was just with put options. I sold the puts for great premium at the time, but I'm out. I'm out of that one. Okay, well that's gonna do it for me, everybody. Oh no, I keep saying that. Like I'm so scattered. It's Monday. I'm just tired. Here is your Monday activity. You can see we really had one piece of data came out today, which was worse than expected. That's new home sales, and we talked about that on why the expectation was that we would come out a little bit less than expectation, and that was because that 10-year has been running for the past 2 months. It's been running all January and February. We've seen that 10-year surge. That is definitely increase the rates on the 30-year fixed rate mortgage at least 50 basis points, half a percentage point. And that could have an impact on it. Those numbers that came out today, I think, reflect that. You had 661,000 new home sales for the month of January. This is going to be a lagging piece of data. Now, tomorrow, we do have some bigger information for our markets. We have durable goods orders. That does not look good. Expectations are actually pretty dismal, in my opinion. Looks like a decline of 4.9% expected on durable goods orders. When we look historically, it certainly has plenty of periods where it oscillates back and forth. It seems like a big up month, big down month, big up month, big down month. So, yeah, it will most likely get a nice down month here for that durable goods orders. And then as far as U.S. goes, we also have the Case-Shiller Composite 20 Home Price Index, which should show how housing prices increasing more than expected. We were at 5.4%. They expected to be 6%. And then you have several FOMC members will be speaking tomorrow. You also have a rate announcement for New Zealand. You have consumer confidence for the U.S., manufacturing from Richmond numbers. So a busy day for the U.S. markets and, I guess, international when you have the Bank of New Zealand. KF says, remember a while back ago you were supposed to find out about the subject of House Always Wins. You never did a show on that. I know, I didn't. I just haven't had time to sit down and do it. I've been so busy with other stuff, you know. A lot of the times when I do shows like that, I build out lots of graphics and lots of research, and I need to tell the story of that one. You know what might be better, KF, is if I don't do a live show on that one. And maybe I'll do, because I've been wanting to do more evergreen content, because like this show is dated. It's got the date right on the screen. It's not going to, stand the test of time. But it might make more sense for me to release that one as a pre-recorded video. And that way, maybe it'll get higher up on search engine rankings for YouTube or whatever. So keep asking me, KF. Keep bugging me. Keep pushing me to do it. I haven't forgotten about it. I've just been really, really busy, and which is a good thing for me. I thrive on being busy. But I will try to get to that one because I think it's a really good topic on how the house always wins. So be the house. Be the house. All right. Well, thank you guys so much. Hope you enjoyed. Hope you learned a little bit of something as the usual goal here. If you have anything you want me to talk about, you want a specific show this week, tell me what it is. Put it down below any of the YouTube videos or email me at TraderMerlin@gmail.com, and I will get to that. That said, have a fantastic remainder of your day, and I will see you tomorrow. Take care, everybody.